Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Tuesday, October 23rd, 2012. Well, a continuation of the trend to the downside today in the candle. It's made a lower high and a lower low. Previous day's trading, we had a potential reversal candle, a very small white body candle, just a white body, almost a doji type candle with a very long shadow on the bottom of this candle, highlighting the loss of commitment from the sellers for that previous day's trading. It was a hammer type pattern, a potential bullish reversal pattern, and did set the market up for that potential change of trend. Now that change of trend didn't happen, and as with all reversal patterns, confirmation is required, and we should have been watching the high of that candle for a potential higher high and higher low. For today's trading, the market didn't trade towards that high. The market opened up towards the highs today and traded down for most of the day, and didn't trade anywhere above the previous day's high, thus negating any potential reversal to the upside. We have had a very significant large black body candle day. The large black body here for today's trading denotes the sellers making a very solid amount of net bearish progress, continuing that downside momentum. The sellers have been strong enough to actually take out two strong previous levels of support and resistance at the 1422 and the 1415 level in a very bearish way, and that is quite significant as well. They've managed to close the market down towards the low, certainly well below the midpoint level, denoting the sellers closing with control of this market. The buyers did lose some commitment late in the trading day. Here we see the small shadow, not terribly significant, however. The important thing here, however, is that we've had this bearish close down outside of this congestion area, this flag type pattern. Here we have the prior uptrend, here we have the congestion with a flag type pattern and a bearish breakout. And if you recall, when I was discussing this pattern over the last few weeks, that they tend to be continuation patterns. The likelihood was that it would be continuation because it was occurring up above the Ichimoku cloud, but they can also be bearish reversal patterns. And here we've seen the breakout, and as with all patterns, we don't have confirmation of the pattern until we have the close above or below the barriers of the pattern. And here, with this close down below the pattern, it is confirmation of that as a reversal pattern. It's quite obvious that that is the way that it should be traded. If you're trading this type of pattern, basically you take the trade as or a short trade as the market closes down below the bottom barrier, with your stop just on the other side of the barrier, so up around the roughly just about above the 1470 level. But you only have a risk to reward ratio of 1:1, because we have a target, the width of the pattern projected down from where the breakout occurred, and that gives us a target down around the 1378 level. And your stop is just above there, so it's 1:1, so it may not be worth taking the trade. We also have very strong support down below. We have strong support around the 1400 level, and this will be important for the market for tomorrow's trading. If we do see the market continue trading down, the 1400 round number will be strong support because it's at the bottom of the cloud, and also a round number. Now, with the projection of this target down below the 1400 level, it coincides with this potentially strong support and previous resistance area around 1378, and that does give us a good target. But certainly the 1400 round number area of support will be very, very important for this market moving forward. Now, in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down. For today's trading, we've seen the market close in a bearish manner down below the 261.8% level, and that could be significant. We don't have any targets until the market trades down to the 423.6% level around 1386, and that's down below the bottom of the cloud. So whether the market actually trades down there is debatable, but we have seen a bearish close down below the 261.8% level. In terms of the Fibonacci retracement of the prior uptrend, and we're now in an expansive mode of that. We've traded down through the 100% level today in a bearish manner, and the next level that we're looking at is the 161.8% level. It's actually at 1401, and that coincides with the bottom of the cloud and that area of support, the round number support at 1400. It makes that area around 1400 even stronger, and I'd suggest that it is a level where the market will hold up, and we need to watch this level if the market does continue selling off for tomorrow's trading, and we probe down below there. Let's look for buying to come in for a potential change of trend back to the upside. Now, in terms of the trend channels and the trend lines, 2 trading periods ago we saw this bearish breakout down below the trend line, and it was quite significant. We've seen the market carry on with this move. We have seen this continued downside momentum by the sellers, and the breakout down below the trend line did give us a warning of this continued downside momentum, and certainly of a lack of momentum to the upside, and the trend in this very large time frame as defined by these major peaks and troughs. In terms of Ichimoku, the market remains neutral in the long-term time frame. We were trading within the cloud for the previous day's trading, so we no longer had a bullish market that was trading above the cloud for quite some time. Today the market is neutral by trading within the cloud. There is a possibility of a breakout down below the cloud that would give us a bearish market in big picture terms if we do see that close down below. But also in the medium and fast term timeframes, we have a bearish market by trading down below the Kijun-sen and the Tenkan-sen. Both of those are pointing down fairly sharply, reflecting some strong downside momentum in this market. And if we look at the Kijun-sen here, it's been quite some time since we saw that pointing down. It's either been pointing up or sideways, so quite a change in the momentum in this market, and a change in confidence from the buyers. The momentum has really swung to the sellers in that medium-term time frame, and certainly in the short-term time frame, and it does suggest that there is potential for lower levels. But moving forward tomorrow, obviously this 1400 round number will be very important. If we do see the market rally from here, then we will need to trade through the 1415, 1422 level. But now we also have strong resistance overhead, roughly up around this 1440 level. The top of the cloud is trading there, and the 1440 level is another level that will add to the strength of that resistance overhead. So it won't be easy for the buyers to actually turn this back into a bullish market very quickly.